For TraderInsight.com, I'm Adrian Manns. It's Friday, January 14th, 2022. Let's walk through the logic of our opening trade. Looking at Apple in the pre-market, we see that 170.44 was pretty firm support. This was today's S1 pivot, and we had a very good indication here that if it got down there, we were going to get a sharp inflection. We also, though, saw this 170.65 level, which really caught more of these lows and gave us a better opportunity to capitalize on a pop into the opening bell. So the game plan here initially was a 170.65 entry with a 171.24 target and a 170.40, maybe a 170.35 stop loss. If you were part of the first hour strategy session, then you know that Eric asked a very good question about how to jockey those orders around and how can he change them quickly without messing up the structure of what he's got going on. So let's take a look at how we would set these up and how we would handle the brackets that would get us in and out of the positions. So first things first, in the pre-market, we've got plenty of time to set up a trade. So we can set all the parameters exactly the way that we want them. So if we go to our real tick order entry, and of course you can do this in TradeStation, Thinkorswim, or anything, you want to make sure that your quantity is what you'd like it to be. Don't trade big shares if you're not comfortable with the position sizing. Always trade in a way that exposes you to the amount of risk you're comfortable with. And remember, if the position goes against you, you're going to lose money. Let's take a look at how we set this order up. So first off, always make sure that you've got your position sizing at a level that you're comfortable with. If you're trading with more risk than you can afford, or if you're trading out of your comfort zone, I will guarantee you're going to make mistakes and you're going to lose money. So there's an old saying, right? Don't trade with money you can't afford to lose. I would say it's not about whether or not you can afford to lose it. Think about the psychological impact of that loss. Affording it is one thing. Being able to deal with it and make the best choices the next time around are two totally different things. But that being said, let's look at this 170.65 level. In the pre-market, you have plenty of time to set this up and exactly the way that you want to trade it. So if we're looking to buy the bounce in the morning, we would have an order pop-up that looks like this. So 170.65 is the limit order. And why is that a limit? It's a limit because we're looking for price to come down to us. So it's not a stop limit. Stop limit would do a different thing, and we'll look at that in a second. Right now, if price is coming down, if it's falling toward our entry, then we're going to use a limit order and say we want to get in at 170.65. That's the only price we'll accept on this entry. I've got my expiration set today. These must agree between entry and exit orders, or your bracket will not execute properly. Then we would set a 100% exit, 171.24 for a profit, and 170.35 for a loss. So I think, and Eric can correct me if I'm wrong, or any of you can send me an email and tell me you don't get it, but I think this is pretty self-explanatory. You've set this order up, and now it's live on Apple. But you also know that the stock might not make it back down to 170.65. So going into the opening bell, you see this move higher, followed by this move back down again, and things start to look like we might not see that 170.65 print. So now what I'll do is change to a stop limit order here and make sure that I'm ready to catch a dip. So once the market opened, Apple traded higher immediately. It popped right through the 171.63 line, and of course we didn't get filled at our lower price. The question in the strategy session this morning was, how do you get those orders out so quickly? What you want to do is set this up right around the opening bell for whatever the next level is going to be. So in this case, 171.63 stop, 171.65 limit. That will get me into the position if Apple trades from the close of bar 1 up through 171.63. That's called the stop price. That's where something gets activated, something's going to go live, and 171.65 is going to be the limit. That'll be the worst price that we're willing to accept. So if we put that buy order out there, you can see we've got 2 live orders right now. Then what I said in the strategy session was, if you don't want to leave this leg out because you don't want to chew up the margin, you can just come in and cancel that order. Now what you're looking for is this level to be violated, and once this order was in this morning, you could already go and structure the next one. So you'd be ready to go either from a lower entry point or a higher entry point. And of course, the other thing you can do is set up multiple market maker tabs and have the different levels populated for all the lines you've drawn on your charts. Once the position was on, we saw a move up through the 171.63 level, and then, of course, the question was, where would you trail your stop? So if you were out 172.41 on your bracket, then there's nothing to trail. And if you wanted to trail it, a good thing to look at was the volume weighted average price of the first move higher, of this leg higher, that gets you up into this part of the range. Where, in terms of price, do we have a representation of a violation of that VWAP? And that's down here, and that would be a good place to trail the stop. If you did it that way, maybe you had to ride all the way to the 173.53 pivot line. As you know, I err on the set 'em and forget 'em side of things and like to move on to the next trade. So my structure would just be to enter at 171.63 and exit at 172.41. I hope that helps. If you still have questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for Tuesday.